think there are two issues here. One, that any weak economic cycle is bound to have its impact on the asset quality of the banking sector. And as we have seen over the last few quarters or over the last 2 years, we have seen deceleration in growth. We have seen some of the policy concerns that all these have naturally put some stress on the banking sector asset quality. Does that imply that the asset is bad, or it is, it's just not for the time being able to, post a return? I think there has to be a distinction made. Are the projects viable or they are not viable? They are viable. It's only that they have temporary mismatches in terms of cash flows. So inherently, they are not bad assets. They need perhaps in the near term some hand-holding, be it through the regulators, allowing the banking sector to restructure, because per se they are not bad loans. It's just that they need help in tiding over the short-term kind of funding gap, and once that is recognized, probably those projects will be able to become more productive and quickly productive in terms of giving positive returns or returns. So I think definitely the weak economic activity has resulted in asset quality getting stressed. The key factors that any bank should be looking at is remaining proactive. I think risk mitigation comes to fore. Every bank needs to have a very strong risk management and a proactive risk management. Also in terms of preserving your balance sheet, I think it's very important to have strong provisioning, early recognition, and as long as the bank management is proactive in these aspects, I think the temporary stress that is being witnessed in the banking sector will be well managed. We at our Yes Bank have been able to do that very effectively in terms of early recognition of stress and also adhering to very sound and proactive kind of practices, and as a result our net NPLs even after provisioning just remain under 6 basis points. So I think it's very important for each bank to recognize in terms of early warning indicators, having very strong risk management practices, so that even though the economy, the weak economy, is translating into asset quality getting under stress, the banking sector is able to withstand those pressures by adhering to good and sound practices. As far as the durability of this stress, I think, as I said, we are looking at the second half of this year turning better than what we witnessed between April and September of the fiscal 14. Quite clearly that should begin to help, also translate into some of the concerns getting addressed. The second point, of course, is the government's proactive stance in now looking at, through the CCI route in quick clearances of projects which have got, have seen hurdles. I think as soon as we see quick resolution to many of those projects, particularly in the infrastructure sector, I think banking sector would, see a positive spillover of that in terms of the stress beginning to recede from those assets pertaining to the sectors, particularly in the infrastructure sector. So I think it would take a while for the entire banking system to probably heave a sigh, but definitely I think the regulator and the government both should remain proactive in helping out genuine cases of projects getting addressed by some of the resolution mechanism.